Okay, looking over at vol, realized vol is staying extremely low. You can see here the orange line on Bitcoin, realized vol coming in about 23, and Ethereum's down to around 45. Bitcoin front end vols dropped by 5 points, Ethereum only down 3 this week, carries back to positive, looking around 7 vols on Bitcoin and about 11 vols on Ethereum. So gamma sellers definitely getting rewarded at the minute. OHLC charts are showing not too much intraday heartache for the gamma sellers. Implied ranges being pretty well respected. We got one test there on Bitcoin on the downside, but very narrow within that on the rest of the days. Ethereum had a little momentary breakdown there, but bounced. And there you can see it closed at the implied range level on one day, but didn't manage to break it. So in general, the kind of price action has been behaving itself, making life a bit easier for those coming from the short vol side of things. The coiling price action, though, often does precede a big breakout. So there comes a point where if we coil enough and we get tighter and tighter ranges, then the market wants to break out of those at some point, right? So getting too confident selling gamma right now, even though it's working, getting too confident selling gamma right now, could be dangerous here, given the low levels of implied vol and the fact that that coil generally does break one way or another, right? So you probably want to be careful in how you sell it. Maybe you're going to get rewarded more in doing 0 DTE type stuff than just banging out a load of 1 or 2 week gamma, basically, because we may well have a break out of the range at some point. So just kind of making hay while the sun shines in 0 DTE might be a better way to capitalize on that. It's certainly something we do more regularly on S&P, but I can see it making sense as well on crypto. I have spoken to some crypto hedge funds who do actually harvest theta in the crypto vol space quite systematically, and they do tend to have a bit more success doing it in those 0 DTEs as well. All right, so that's where we are in terms of realized. You can see here the shape of the curves, pretty steep contangos across both assets. But looking at the way the curves have moved, front end Bitcoin offered, but going out to September, we are finding a little bit of a bid in September and December. Whereas if you look on ETH, whilst the front end didn't drop as much as Bitcoin, we had July unchanged, and then you had about half a vol point to 3/4 of a vol drop in the longer end of Ethereum, which obviously has been holding up really well in the 60s and is a good 20 vol points above Bitcoin. Here's your time series charts, and you can see kind of flatlining in the medium term part of the vol surface, but that front end steepening into the long weekend, bouncing out of it, and then steepening once again over the last day or so, showing that 1 week vol is really quite under pressure now that Trump has come out and said whatever he wanted to say on tariffs, and it didn't move the market too much. Looking at skew, you can see we did have a little dip into put skew on the weeklies, but that has bounced straight back out there. We got to -4 vols, and we got on Bitcoin and like -6 on Ethereum on the weeklies. Both of them have reverted back to around flat on both assets there. All right, so that's skew and the time series. Looking at the skew term structures, you can see here we were in a 1 vol put skew in the front. That's flipped to nearly a 1 vol call skew in Bitcoin. The peak of the skew on calls is around 2 vols in September, and then that kind of gradually works its way back to about 1 vol in the back end on Bitcoin. Ethereum holding a little bit of put skew still in July expiries at around 1 vol. And then you can see here we do flip into calls, but we only get to about 1 vol point call premium in September, and it kind of stays gradually around there, 1 to 1.5 vols for the rest of the curve. So you can see Ethereum not quite as bullish, but still bullish in the long end, but not quite as bullish right now as Bitcoin. It seems to have kind of taken the baton once again in terms of what the options market's saying. And you can see that here on the relative value side of things. Whilst the front end spread did pop back again, even though ETH BTC has been grinding slowly higher and not really doing too much, front end popped back to 25-ish. But look at the back end. The back end started to come off. So in December, we've gone back to sort of sub 20 level. I was thinking 20 was looking too expensive, and hence why I put my trade on. And the market is starting to slightly agree with me. So my Vegas spread in December is starting to make a little bit of money. It's not like it's making loads, but it's made 1 or 2 vols since I've done the trade. I was looking for like 5 vol kind of target for it. but we'll kind of monitor that and see how that goes. Looking at the relative skew, you can see here, this blue line is trading under for the most part, which basically shows Ethereum skew is definitely biased more towards puts than Bitcoin is. And whilst that wasn't the case in the back end of the curve, it is now even the case in the back end of the curve, right? As you can see here, this red line being above zero was showing you that Ethereum calls were trading at a slight premium, and they've kind of given that back now, basically, right? So the fact that this is in negative for most of the curve shows us that Bitcoin has kind of taken the mantle a little bit there in the back end in terms of skew, right? Obviously, absolute levels of vol are much higher in Ethereum, but the call skew now is starting to look a little bit higher in Bitcoin once again. All right, so overall, not a ton going on. I'd say, this realized vol collapsing the way it has means you just got to be a bit patient. You don't want to be bleeding too much theta right now. We're obviously running our crypto wheel that's been spinning, making a little bit of theta around the edges on Ethereum. Our Bitcoin hedge strategy has obviously been working out pretty well in terms of it's been participating in the rally, but has been protected for drawdowns. That's the whole purpose of it. I did beef up the hedge a little bit as the risk reversal was decaying away in July. So I've kind of rolled my hedge out to August now, just to kind of keep it alive, to make sure if we do come off, it does actually make some money, right? That's the thing. There's no point in having a hedge that is actually going to give you no protection if the market sells off, right? So we've got to make sure we keep that hedge alive by rolling it periodically as it decays away, right? That's how we manage this thing. All right, guys, I'll leave that with you there for this week's crypto vol update, and I'll catch you guys next week. Cheers.
Hi, everyone. Thanks for making it to the end of the video. Remember, this is just a little taster of what we do at Options Insight. To get access to all our research, including my in-depth vol market insights, flows and positioning report, and my portfolio trades, and a whole lot more, you can sign up at options-insight.com. I'll see you soon.